What happens when a healthcare company, an industry considered one of the safest and most stable, suddenly decides to bet $5 billion on one of the most volatile assets on the planet? This isn't a hypothetical question. This is the real story sending shockwaves across Wall Street.
A NASDAQ-listed company, ticker NAKA, just announced a bold plan that could either completely reshape the future of corporate finance or drive them to the brink of collapse. In today's video, we're going to dissect this historic gamble. Is this a genius move, a MicroStrategy 2.0, or is it a multi-billion-dollar mistake? I'm your host, Mike, and you're watching Crypto30 Insights. Let's dive in. Now, before we get into our main subject, KindlyMD, we need to understand the macro environment.
The traditional stock market, represented by the S&P 500, is showing signs of stalling after a period of supercharged growth. Inflation remains a persistent problem, and faith in traditional safe haven assets like gold is being tested. In this environment, corporations are facing a critical problem. How do you preserve and grow the value of your treasury when the dollar itself is losing its purchasing power?
Michael Saylor and MicroStrategy pioneered a controversial answer: make Bitcoin their primary treasury reserve asset. Their argument was that in a digital world, you need a digital property to store value. This strategy transformed MicroStrategy from an obscure software company into a de facto Bitcoin proxy investment, and its stock price exploded. This story is the essential prelude to the even more audacious move we're about to analyze.
Let's get back to KindlyMD. Full name, KindlyMD Inc. NASDAQ ticker, NAKA.
So a healthcare company merged with an entity named Nakamoto, a name that couldn't be more symbolic in crypto, and immediately announced a plan to raise up to $5 billion to buy Bitcoin. So how does this machine work? They're using a program called an at-the-market, or ATM, offering.
CEO David Bailey calls this a flexible tool, but let's call it what it is. This is a machine designed to convert stock value directly into Bitcoin. Now, let's analyze both sides of this. This is the most important part.
The bull case. Why this could be genius. First, it's the evolution of the MicroStrategy playbook. Instead of taking on debt to buy Bitcoin like MicroStrategy, KindlyMD creates a potential positive feedback loop. Second, it creates a proxy Bitcoin ETF. Institutional or retail investors who are hesitant to buy Bitcoin directly from an exchange can buy NAKA stock as a way to get exposure to Bitcoin's performance. This opens up a massive fire hose of capital from the traditional stock market. Third, the sheer scale of it. $5 billion. That is not a small number. If they truly deploy this, that buying pressure could create a significant supply shock on the Bitcoin market, potentially driving the price higher. According to Glassnode, the liquid supply of Bitcoin on exchanges is already at historic lows, and a new mega buyer would only increase that scarcity. The bear case. Why this is an extremely risky gamble. First, volatility risk. We all know how volatile Bitcoin is. A 50% drawdown is not uncommon. If Bitcoin crashes, KindlyMD's balance sheet gets obliterated. The $NAKA stock price would plummet, and that genius flywheel would reverse into a death spiral. Second, shareholder dilution. To raise $5 billion, the company will have to issue a massive number of new shares. This dilutes the value of the shares held by existing investors. You are essentially trading away a piece of your ownership so the company can go buy Bitcoin. Third, regulatory risk. The U.S. Securities and Exchange Commission, SEC, is definitely watching. They will be asking the question, is this still a healthcare company, or is it an unlicensed Bitcoin investment fund? KindlyMD's actions could set a dangerous precedent and will undoubtedly attract intense regulatory scrutiny. And fourth, and most importantly, where is the core business? What did the company do originally? Healthcare. Is that business still relevant, or is it now just a shell to execute a Bitcoin strategy? If investors lose faith in the underlying business, they'll treat $NAKA as a pure speculative vehicle.
KindlyMD's move doesn't just affect them, it sends a powerful signal to the entire market. MicroStrategy takes on debt to buy BTC, treats BTC as its primary reserve asset. Tesla bought BTC with cash on hand, briefly accepted it for payment. Note, later sold a significant portion. KindlyMD issues new stock to buy BTC, a continuous, massive-scale model.
As you can see, KindlyMD's strategy is far more aggressive and systematic. It's not a one-time purchase. It's an ongoing process designed to maximize its Bitcoin holdings. What does this mean for you, the crypto investor? 1. Legitimacy. Another NASDAQ-listed company going all in on Bitcoin further solidifies its status as an institutional-grade asset. 2. Potential price volatility. If NAKA succeeds and other companies copy this model, a torrent of capital could flow from the stock market into crypto. 3. Systemic risk. If NAKA fails spectacularly, it could create a powerful negative narrative, provoking a regulatory crackdown and scaring off other institutions.
Looking at the technical chart for NAKA, we see unprecedented explosion in trading volume. This stock will now move almost in tandem with Bitcoin's price, but with greater leverage. It will become a key sentiment indicator for institutional adoption.
So is KindlyMD ushering in a new era of corporate finance, or making a reckless gamble? The answer is both. This is a bold experiment, pushing the boundaries of what a public company can do. If it succeeds, it will blaze a new trail for corporations to integrate Bitcoin into their core strategy. David Bailey and KindlyMD will be hailed as visionaries. But if it fails, it will serve as an expensive lesson on the dangers of betting a company's future on a single, volatile asset.
The most important takeaway for you is this. The game is changing. Institutions are no longer sitting on the sidelines. They are actively finding ways onto the field, and those methods are becoming more creative and more risky. For investors in NAKA, you are no longer just investing in a healthcare company. You are investing in the performance of Bitcoin, with an added layer of corporate and dilution risk. Proceed with extreme caution. That's my analysis of this incredible story. Now, I want to hear from you. What do you think of KindlyMD's strategy? Is it a work of genius or pure madness? Leave your comments below. This debate is crucial for our community. And if this analysis provided value, don't forget to hit that like button and, most importantly, subscribe to Crypto30 Insights so you never miss a deep dive. I'm Mike. Thanks for watching.